Have you ever wondered how the wealthy manage to keep getting wealthier, even while their everyday expenses keep piling up? What if I told you that they don't just earn more money, they have mastered the art of turning everyday expenses into massive tax savings? It's a game of leveraging the system. While most of us are paying full price for everything, the wealthy know exactly how to use everyday costs to lower their tax bills. In today's video, we're going to dive into some simple yet powerful strategies the wealthy use to turn regular expenses into savings. Let's dive in. 1. The magic of the home office deduction. One of the simplest yet most powerful ways the wealthy save money on taxes is by using the home office deduction. If you work from home, you can write off part of your rent, mortgage interest, utilities, internet, and more. Here's how it works. If you use a specific area of your home exclusively for business, say a spare bedroom or a corner of your living room, you can deduct a percentage of your home's costs. The IRS allows you to calculate this deduction either by using a simplified method or the regular method. With the simplified method, you can deduct $5 for each square foot of your office space, up to 300 square feet. That's a $1,500 deduction. For the regular method, you would calculate the percentage of your home used for business and apply that percentage to your actual home expenses. This could be a huge win for you, especially if you're running a business from home, whether it's a full-fledged home office or just a small section you've dedicated to work. You're now using your home expenses as a tax-saving strategy. The wealthy know this, and they use it to reduce their taxable income every single year. 2. Laptops and phones as business tools. The next area where the wealthy save big on taxes is through technology expenses. Think about it, laptops, smartphone, and other gadgets are now essential for almost every business. The IRS allows you to deduct the cost of these items, as long as they're used for business purposes. If you bought a $2,000 laptop for work, you can write off the portion of the laptop that's used for business. For example, let's say you use that laptop 80% for business purposes. That means you can deduct 80% of the cost, $1,600, from your taxable income. The same goes for your cell phone. If you use your phone for business calls, meetings, and emails, you can write off a percentage of your phone expenses. Many business owners don't realize that they can write off their technology expenses, and even fewer understand how much of their devices can be deducted. But the wealthy, of course, use this tax code to their advantage, constantly writing off their tech purchases and keeping more of their income in their pockets. 3. Deducting vehicle expenses for business use. When it comes to everyday expenses, vehicles are another major expense that can be turned into tax savings. If you're using your car for business, whether it's driving to meet clients, picking up supplies, or running errands for your business, you can write off a portion of your vehicle expenses. There are 2 main ways to calculate your vehicle deduction: the standard mileage method and the actual expense method. With the standard mileage method, you track how many miles you drive for business purposes and multiply that by the IRS's approved rate. For example, in 2025, the IRS is allowing a deduction of 70 cents per business mile. So, if you drive 1,000 miles for work, you can deduct $700 from your taxes. On the other hand, the actual expense method allows you to calculate all the expenses related to operating your vehicle, like gas, insurance, repairs, and depreciation, and then deduct a percentage based on how much the vehicle is used for business. If you use your car 50% of the time for business, you can deduct 50% of your vehicle's operating costs. But here's where the wealthy go a step further. They might even buy luxury cars or trucks and use Section 179 to write off a large portion of the vehicle's purchase price. For example, if you purchase a vehicle for business purposes, you can immediately write off a portion of the cost in the first year, reducing your tax liability right away. 4. Writing off business meals. It's not just about home offices and tech equipment. The wealthy also use business meals to save big on taxes. If you own a business, you can write off 50% of the cost of meals related to business activities, and that includes dining with clients, business partners, or anyone you're meeting for a legitimate business purpose. Let's say you go out to dinner with a potential client to discuss an upcoming project. You can deduct 50% of the meal's cost from your taxes. The IRS wants to incentivize business owners to interact and grow their businesses, and meals are an important part of networking. But here's a critical detail. The meal must be directly related to business. If you're dining with a friend and chatting about a side project you're working on, that meal isn't deductible. But when you're having a legitimate business discussion, you can take advantage of this tax-saving strategy. And this is something the wealthy use all the time to save money and reduce their taxable income. 5. Travel expenses for business. Just like business meals, business travel is another area where the wealthy are masters of tax-saving strategies. Whether it's flying to meet a new client, attending a conference, or visiting a property for a real estate investment, travel expenses can be written off as long as the trip serves a business purpose. The list of deductible travel expenses includes transportation, airfare, car rental, taxis, lodging, hotel or Airbnb, meals while traveling, and even incidental expenses like baggage fees or tips. For example, if you're flying from New York to Los Angeles for a business meeting, you could deduct the entire cost of your airfare and lodging. Here's the catch though. The trip must have a business purpose. A trip to Las Vegas to visit family is not deductible, but a trip to attend a business conference or meet with a supplier would be. And just like with meals, you'll need to keep detailed records. Keeping receipts, a travel log, and your itinerary is crucial to making sure your deductions are fully supported. 6. Health-related expenses. While most people think about medical expenses only in terms of out-of-pocket costs like doctor visits, the wealthy know that health-related expenses can be deducted too. If you're a business owner, you could deduct health insurance premiums, and if you contribute to a health savings account HSA, that's tax-deductible as well. Here's the kicker. Some of the wealthiest people in the world use HSA contributions as an additional retirement savings tool. The money in your HSA grows tax-free and can be withdrawn for medical expenses in the future, but after age 65, you can also withdraw for any purpose without penalty, making it a great way to save for retirement and reduce your taxable income in the process. 7. Education and learning costs. Did you know that the IRS allows business owners to deduct the cost of education if it improves your skills related to your business? That means courses, workshops, seminars, and even books that enhance your ability to run your business could be tax-deductible. This is a huge win for anyone looking to improve their skills or expand their knowledge. The wealthy know that staying ahead of the curve requires constant learning, and they use the tax code to make that learning affordable. Whether you're improving your marketing skills, learning new technologies, or expanding your financial knowledge, these education expenses can be written off. And the more you learn, the more you save in the process. 8. Long-term investments in retirement accounts. Finally, we can't forget about retirement accounts. The wealthy make full use of retirement savings plans like 401k, IRAs, and other tax-advantaged accounts. These accounts allow them to save for the future while reducing their current tax liability. By contributing to these accounts, you're able to lower your taxable income for the year and grow your investments tax-deferred. In addition to that, contributions to certain types of retirement accounts may even be eligible for tax credits, helping you save even more money. This is one of the simplest and most effective ways to reduce your tax bill while preparing for the future. As you can see, the wealthy have mastered the art of turning everyday expenses into tax savings, and now you know how to do the same. By leveraging strategies like business deductions, travel expenses, and retirement accounts, you can significantly reduce your tax burden and increase your wealth. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more tips on building your financial future. Start making smart financial moves today, and I'll see you in the next video.